We've pulled together this checklist of 7 things to consider that may help you narrow down your investment choice and find a fund that will meet your objectives. We know researching and choosing the appropriate exchange-traded fund, or ETF, can seem overwhelming, especially with the wide range of funds available on the ASX. Asset class. What asset class do you want exposure to? For example, are you looking to add Australian or international equities, fixed income or currency to your portfolio? Did you want to keep things simple and invest in a diversified ETF that includes multiple asset classes in a single trade? Understand the ETF and/or the index your investment aims to track. What is the ETF's investment objective? Is it a passive or actively managed strategy? If the ETF aims to track an index, what is the index methodology? For example, is it weighted by market capitalization, fundamentally weighted, equal weighted, or does it implement a rules-based methodology? What are the risks associated with the ETF? Is there a noticeable difference between the ETF's return and the index's return over time? Country or region. Which regions or countries does the ETF give exposure to? For example, an international ETF could aim to track a country-specific index, a regional index, or a global index. Sector. Are you looking for exposure to a specific industry sector, such as financial services, energy, technology, or healthcare? Tapping into international sector ETFs may be a way to enhance diversification and add a growth element to your overall portfolio. If you're after broader exposure, it's important to consider how sector-concentrated the ETF's index is. For example, the top 200 companies on the ASX, and any ETF that aims to track this index, is heavily weighted towards the financials and resources sector, compared to the NASDAQ 100, which has a significant allocation to technology. Holdings. What are the ETF's top underlying holdings? For example, which companies are included in the ETF's portfolio and what is the weighting in each? Cost. Have you considered the management costs of the ETF? For example, an ETF may have an annual management cost of 0.35%. That's $35 for every $10,000 invested. For context, some unlisted funds can have an annual management fee of over 1%. Distribution yield and/or franking. Does the ETF pay distributions? Are there franking credits attached? And do you prefer to take your distributions in cash or reinvest them back into the ETF via a distribution reinvestment plan if available? BetaShares has the broadest range of exchange-traded products in the market, all of which can be bought and sold via the ASX. Learn more about our funds and ETF investing at betashares.com.au.